we started listening to the investors and our own investors, and they wanted a little bit more hands-off just with what they had going on in life. A lot of them work, still have jobs, and just didn't want to, take the day-to-days of where's my property at, where's my tenant at, am I getting my rent this month? They didn't want to sweat that anymore. So for us, the fund was kind of more or less a no-brainer.
Hey, real estate investors, welcome to another episode of the Ask James Wise Show here on Holton Wise TV. This is the show where I give you real estate information. Any and all questions you guys have about real estate, go ahead and drop those in the comments below. If it makes sense to do a full video on that, we will do so. Or if it's just something very easy, very quick, you could just drop that in the comments below and maybe we'll just send you a link to a video we've already made, or we'll just answer the question for you right there. And today, what we're going to do, we're going to talk about funds. Private placement funds. There are several types of funds, and what is the differences between investing in each of these types of funds or direct property ownership, which is something that we talk about the majority of the time. Now, here at Holton Wise, we do not currently offer anybody the ability to invest in any private placement funds, but a company we work closely with, US REIB, they do. In addition to their turnkey business that's operating in a few markets, they're in Kansas City, Dayton, Cincinnati. In addition to offering you guys the ability to invest in their turnkey products, which would be direct ownership, they have a private placement fund, and I talked to the owner, Sean, about that. Let's take a look at our conversation now. All right, Sean, so you do turnkey real estate. I'm very familiar with that too, right? We have very similar businesses in that mode, but you also have this fund. It's called Investor First Fund, and this is different than the turnkey offerings you're offering through US REIB, correct?
Yes, and how it differs is that you can buy security shares compared to a single family property or residence or multifamily residence.
Now, when you say you can buy security shares, can you kind of like walk us through exactly what that means? We get a varying level of experience with our audience. So I know some folks, that's elementary stuff to them, but can you kind of walk me through this? Like, I've literally never heard of what a fund is.
Yeah, so there's different options on a fund. I mean, you can look at a 506B to a 506C. From accredited to non-accredited investors is how you accept it, not to elaborate on either one too much. But ours is a 506C, meaning you have to be an accredited investor, a knowledgeable investor.
What is the difference between an accredited investor and a non-accredited investor?
There's a couple different things, and some of the basics right now would be, as an individual, you have to make at least $200,000 a year with a net worth of $1 million without your residence being calculated into that million. As a married couple, you have to be making at least $300,000, at least 2 consecutive years, and a net worth of $1 million, but your permanent residence not in the liquid side of that $1 million.
And as an investor, how do I go about proving my status of accreditation?
Well, we advise everybody to get with their CPA. Their CPAs will know, and it's a one-page document, and look it over with them, and then they check the boxes in accordance to being an accredited investor. So we advise everybody to get with their CPA and read that, and the CPA will be able to let them know immediately.
So if I'm an investor and I'm interested in looking into investing my money in a fund that is only seeking accredited investors, to prove that I'm accredited, you're saying that the first step would be to go to my CPA, and then will my CPA like issue me a signed document on his letterhead that states I, James Wise, am an accredited investor, and then I can take that thing to fund managers like yourself?
Yes, sir. We advise to do that. They don't have to. They can actually just check the boxes in accordance to like our documents, and it suffices the requirements of the SEC, but we like a document from a CPA that states that they are truly an accredited investor. So we like to go above and beyond.
How come you decided to offer a fund in addition to the traditional turnkey stuff you've already been offering for the last decade?
Yeah, when we was out there listening to a lot of investors going to a lot of different seminars. We were trying to figure out, we noticed that there was a variety of different investors, meaning some that wanted the passive income and the not the hands-on per se, compared to some of the other investors that this is what they live for, die for. They want to be involved every single day. They want to try to go for an equity play or an appreciation play, which can sometimes be a little bit risky. So we started listening to the investors and our own investors, and they wanted a little bit more hands-off just with what they had going on in life. A lot of them work, still have jobs, and just didn't want to, take the day-to-days of where's my property at, where's my tenant at, am I getting my rent this month? They didn't want to sweat that anymore. So for us, the fund was kind of more or less a no-brainer. And just talking with the initial feedback from investors, it just became a bigger hit for us. And that's why we're starting to do it now.
Speaking of no-brainer, that's a funny phrase, just because the idea of funds in general, for myself, and I would imagine many of my viewers out there, like there's so much going on with funds that it makes my brain hurt and spin almost. And there's various kinds of funds. So could you kind of like explain to me maybe what the three most common type of funds are and like what the varying differences? Because I know, man, like you read through funds, we're talking 50, 60, 70, 100 plus pages. Like, can you kind of just give us like a quick outline of the varying types of funds that are out there?
Yeah, I mean, the couple that I'm very, very familiar with, I mean, there's so many different types now, but like the fix and flip fund, that's kind of the easier fund, more passive. And that would be, in a sense, investing into it with the SEC basic, buying shares that way. You have your other funds that are where you can get a less return, more of a preferred return is what they call it. This one would be where you are kind of hedging your bet with the equity play with the fund manager. So you're hoping that the fund manager performs at a very high level. So if he's offering a preferred return of 4 or 6%, that's kind of where you're going to be at annualized. And then what they'll do is you're hedging your bet with them on an equity play of them finding good deals. And then if that fund, when it balloons, I guess that for lack of a better word, in 3 to 4 years, you'll be able to blend out a higher rate of return. So that's kind of some of the ones from the real estate side that.
Well, let's with those two specifically. Okay. So you have the fix and flip fund, and that's the fund that you guys are doing. That's what you're offering investors the ability to buy in. This makes the investors more or less like your lender, but you're spreading it out over all these projects that you're going to do. So more or less, you're targeting like a set rate of return that you're hoping to get them. It could possibly come in lower, but more or less, it's not going to come in higher. Like this is what we're going to try to hit, folks. And if everything goes well, we're going to hit this. If things don't go well, this is investing. There are, of course, risks involved. It might come in a little lower. But with this other fund, maybe someone has the opportunity, they could buy into a fund like that. And if the fund manager does really, really well, my return can go up. So like the other one's going to have more peaks and valleys, whereas yours is more of a simple, like this is what we're shooting for. Is that what you're saying?
Yes, that's a very true statement. So more of a streamlined process there, not the variance there, not having to study the wave of the markets that much, and understanding when the other fund, the risk there again would be just worst case scenario, the market kind of that person's investing in not doing as well or performing as well as they would have thought.
So your fund, and what I know you're doing the fix and flip, but what's the official term for that type of fund?
That'd be like a debt fund.
Okay, a debt fund. So would it be a fair statement that a debt fund is more or less the simplest version of a fund?
Yes, sir. That would be the very, very simple version.
Okay, so if I'm a beginning investor and I'm just trying to wrap my head around funding, a debt fund is the most simple fund.
Yeah, and your question would be, how much are they leveraging with my money and other investors' money on a particular piece of real estate? So we're not leveraging anything at 100%. You wouldn't I wouldn't want to be involved with a fund like that. But our max leverage we shoot for is 80% LTV of a finished product.
And the other fund that we talked about, the little more advanced fund where I as an investor, I have the opportunity to ride the waves with the fund manager, but I also have the risk of riding the valleys with him too. What would that be called?
Well, I mean, that's more of an equity fund because you're playing with the equity there, and you're actually essentially, I would say you're a partner in both, but you're a partner with the loss as well as the win.
And in a debt fund, if I'm an investor looking for the most passivity, I hope that's a word, folks, passivity. If it ain't, it is now. Holton Wise TV, baby. If I'm looking to be as passive as can be, a debt fund seems like a lot less intense than an equity fund or even turnkey investing on my own. Yeah?
Yes, sir. That's exactly what I would look at it as. So some people can sleep easier with that, and just understanding that their money's just at a streamlined process, target rate of return, what the debt fund is shooting for, they're going to be around there.
So when I'm investing my money with you, I know if I buy a turnkey property, I have complete control over that asset. So I could buy it today, and I could decide to sell it tomorrow. Now, with a fund, I want to make it very clear to everybody out there. With a fund, folks, your funds are going to be locked up for a certain amount of time. It's usually an initial time that if everything goes as planned, that's how long the fund manager holds your funds. But then I know, of course, funds, sometimes they need to extend those. So, Sean, if I put my money with you in your fund, how long are my funds guaranteed to be locked up? And are there any possible extensions I should know about?
Yes, for sure. Your funds will be locked up for a minimum of a year. And then at that point, worst case scenario, I could extend that up to 9 months if we were in the middle of a refinance for all those properties or whatever just came about at that time. So we could extend 9 months after that year.
Or maybe perhaps like the market softened up a little bit and inventory wasn't moving. I mean, you know, folks, you are investing in real estate, so I don't want anybody out there thinking like, oh man, I'm guaranteed to make money, right? If anybody guarantees you a return, you might need to check in if they're Bernie Madoff or something like that. There are risks. You're diversifying here and you're trying to lower your risk, but of course there are risks. All right, folks, special thanks to Sean for coming on. If after watching that you want some more information from Sean about his fund, or you're interested in investing his fund, or maybe direct turnkey ownership, the contact info for US REIB is below. I'm sure they'll be able to walk you through any and all questions you've got. If you have more general questions about funds, the differences between debt funds and equity funds, or whether or not you should go this route or that route, I want to know. Put those in the comments below. Let's get some conversations started. And if you guys have some pretty serious questions that I think there's a lot of meat to, perhaps we'll make another episode of the Ask James Wise Show about your question. You know, funds, private placement funds, they're very popular on the internet right now. You see a lot of guys pitching these. So I want to make sure you guys have all the information available to you before you invest your hard-earned money with a particular fund or turnkey company or any investment, really, that you're out there reading. That's it for today. As always, I'm James Wise with Holton Wise, and this is Real Estate Investing Made Easy.
US REIB is a full-service, turnkey provider offering investors the opportunity to purchase single-family and multifamily investment properties in Cincinnati, Ohio, Dayton, Ohio, and Kansas City, Missouri. The purchase process is seamless, from reserving a property to obtaining financing, inspections, and insurance referrals. US REIB has a dedicated team in place to manage the process from start to finish. In addition, US REIB is also directly integrated with its own private placement fund for accredited investors. The fund seeks to raise $10 million to capitalize on the repositioning of distressed single-family and multifamily real estate.
RentTech Direct provides you with an easy-to-use yet robust platform for managing your properties, complete with its built-in reporting and accounting system that can be customized to fit your business. You can manage work orders and even accept them online from your tenants. You can also share work order details with tenants or owners if you wish. With RentTech Direct, you'll also fill your vacancies faster than ever with the built-in marketing tools. Just enter the details of your property and RentTech will automatically provide you with a professional online website, as well as syndicate them to popular websites such as Zillow, Trulia, and Apartments.com to get your listing maximum exposure so it's rented fast.
Thanks for watching. Be sure to subscribe to our channel so you don't miss out on our latest content, including video tours and analysis of investment properties that are available for sale, real estate investment education, and our most interesting encounters with tenants from hell. Holton Wise, real estate investing made easy.